It's Tuesday the 21st, I'm FX Plu and this is CurrencyTransfer.com's market update. And the headlines today are that Trump picks on Powell, criticising his rate hikes, sterling awaits Brexit news, and the euro continues a slow, steady rally. So ignoring the fact that it was his own policies that created the inflationary environment, Donald Trump has criticised Fed Chair Jerome Powell, saying he is not thrilled by the rate hikes that we've seen so far this year. And while it's likely that the effects of the tax cuts will reduce and therefore the need for rate hikes throughout 2019 will also reduce, that's a little too far off for our friend Donald right now. The dollar fell in reaction, and it was aided by the news that China and the US are going to sit down and discuss their trade differences. This drove a slight increase in risk appetite, which naturally weakens the dollar. Meanwhile, the Turkish lira remains very volatile ahead of any next move from the US, and the dollar index fell for the fourth day running. We touched a low of 95.45. This week started well for sterling, cable rising against a weakening dollar. We saw 128 yesterday and it continued higher overnight to 128.30 this morning. This was driven by dollar weakness. No sterling strength on the agenda yet because Brussels is reported to be set to reject the Chequers proposal because the Irish border is considered unworkable. No surprise there, sadly. But so far, Brussels has yet to acknowledge the impact that any no-deal outcome could have on mainland Europe. Keep an eye on Dublin here because no deal is expected to be very damaging for the Irish economy. So if Ireland feel they may have overplayed their hand, they could become a key player as negotiations resume. Continuing dollar weakness saw the euro post further gains. Euro dollar reached 114.85 yesterday and continued higher overnight to 115.30 this morning. The euro is also making good inroads against sterling. Yesterday, sterling euro dropped to 111.25, and Charlie on the chart said it could even be set on a path down to 110. One to watch for sure as the summer break draws to a close. So there's no eurozone data out this week, so the market takes a breather and is able to look at the wider picture. We've seen fresh losses from the Turkish lira, but that had no knock-on effect to the euro. It seems that the contagion risk has subsided there. But Greece emerged from their third and final bailout yesterday to see the PM of Greece claiming that euro is unsustainable in its current form, and that is a sentiment supported by the new Italian government that's calling for reform of the single currency. There may be trouble ahead. One to watch, we'll keep you posted.